I'm Matt Bouchard with REIT.com here in New York City for REITWeek 2014. Joining me today is the executive team from American Residential Properties. Laurie Hawkes, President and COO, and Stephen Schmitz, the Chairman and CEO. Thanks for joining us today.
Our pleasure.
It's good to be back.
Now your company's off to a very busy start so far in 2014, having acquired 700 homes in the first quarter alone. Can you talk a little bit about where you're finding the best opportunities geographically, and if you expect that activity pace to continue?
We do. We think that's a well-measured pace. We've been investing about $100 million a quarter in acquisitions. And the best place to find them is where people want to live. What we found is that whether a family is renting a home or purchasing a home, they all want to live in the best communities with the best schools, close to work and shopping and those things.
Now, switching to the leasing side, how are you seeing demand for single-family rentals in the current market, and what are some of the biggest factors in terms of attracting tenants?
You know, it's excellent. In fact, each of the markets we go in, we measure rental demand. It's one of the key things we look at in addition to home price appreciation. And we're seeing rental strength in all of those markets because, number one, a constrained supply. There's a housing shortage in the country for sure, but also rental demand based upon job growth in those particular areas, as well as new household formation.
And I think it does depend upon the market, absolutely. In those markets where we're growing very quickly and still buying, we are finding that we're more interested in leasing the homes the first time round and looking to build on rent growth thereafter. In those markets where we are substantial and have had a presence for some time, such as Phoenix, we're finding that our rents are well over 90% plus, and that the rent growth and the demand that we are generating, particularly on a retention basis, is extremely strong.
And lastly, when we spoke last time, right after the roadshow, one of the issues that analysts were bringing up was, questions about the operation side, maintaining consistency and standards over increasingly large portfolios. How has American Residential sort of answered those questions?
We are continuing to do what we've been doing for the last 6 years. We built out a platform that has expanded considerably over the last few years, but essentially we find that the operations continues to improve. We have better pricing power relative to purchasing products through our national purchasing programs. So the same $1,000, $2,000, $5,000 goes a lot farther. We find that the efficiencies continue to grow. We feel that the hub and spoke system that we have, which is we centralize as much as we possibly can at the parent headquarters and then have our feet on the street relative to our regional offices, has worked extraordinarily well. We get to control the costs, we get to have control over the quality, most importantly, and the timing. And I think this is now a market where securitization has moved into the forefront much faster than anybody expected, and our costs of funding will go down considerably. It is becoming an accepted asset class for an otherwise newly emerging class, and the costs of accessing that market will allow us, as well as our other brethren, to in fact, I think, continue to operate even more efficiently on a margin basis.
You mentioned that the asset class is gaining a lot of steam very quickly. Has that accelerated the learning curve for both investors and analysts?
There was no real way to invest in this housing recovery, was how it started. But then people realized, wait, there's a real business here of owning and renting single-family homes. And they looked at the whole paradigm shift about, do I really need to own a home, or is renting a home okay? And so I think it caused the investors to really drill down and take a much harder look. And so you're starting to see data come together now, where when we first started there was no data. I mean, any data there was we had because we were the first players in the business. And so very, very, very much so. And you've seen people start to vend into the industry too.
Well, and I think it's the parallel to the multifamily is considerable. And if you think how long it took for the investor community to really get their arms around the publicly traded multifamilies and then to follow the way they were financed, here, the process has been absolutely truncated. It's gone at lightning speed. The fact that we can see the spreads we are seeing in the securitization market, the financing, the ability for the sell-side and buy-side analysts to really get their arms around the sector, the nature of the questions we get asked, the data that we're being asked to provide the rating agencies, light years away from even a year ago. And I think that continued learning curve is critical to the market. It's about education, and the more people know about it, I think will bode well for all of us across the board.
Thank you both very much for joining us.
Our pleasure. Good to be here.
We appreciate the time.
For more on this and other REIT news and analysis, be sure to visit REIT.com.